Apartment demand is surging back ahead in the Windy City. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your update from Chicago. We're starting to see some big-time improvement in Chicago's apartment market. The apartment sector absorbed 3,590 units in the second quarter and 18,610 units in the year ending June. That's the highest level since early 2004. And at the same time, annual new supply is at its highest level since 2002. 3,307 new units completed in Chicago over the past year, and more than 75% of that was completed specifically in the Intown Chicago area. We'll talk more about that in a moment. But for the metro overall occupancy is now at 93.9%. That is up 0.3 points in 2Q and up an impressive 2.4 points annually. And rents are increasing as well. Same-store rental rates jumped 2% just in second quarter, but on an annual basis, rental rates still down a very slight 0.4%. Now let's take a look at Chicago's submarkets, and we'll start with the big one, as promised, Intown Chicago. The Intown Chicago area received 1,613 units in second quarter and 2,567 units in the year ending June. But the good news is that apartment demand has more than kept pace with all of this new supply. In the year ending June, 4,200 units were absorbed. And a lot of that is coming from people who are living in privately owned condos offered for lease and moving back in to traditional apartments. That's good news for the apartment industry and for all these new projects in the area. Overall occupancy here is still just 91.6%, not too good, and that is 2.6 percentage points below the metro norm, and it's down 1.9 points in 2Q thanks to the effect of some new supply working through initial lease-up, but it is up 0.8 points year over year. But the good news is when we factor out all these new units working through initial lease-up, overall occupancy is much better, around 93.5%. And even more encouragingly, if we look only at 2000s era properties and subtract out the stuff that was completed in the past year, occupancy comes in at close to 95%. So that bodes well for all this new stuff working through initial lease-up. So the real problem in Intown Chicago is not the new units, but it's properties built in the 1980s, which were just 91.7% full at the midpoint 2010. And Intown Chicago's rental rates are starting to improve as well. Same-store rents improved 2.3% between March and June, but they are still down 0.9% year over year. And one other submarket I want to highlight is the South DuPage, Naperville area. Occupancy here is tightest in the metro, 95.6%, up 1.9 percentage points in 2Q, and up a metro best 4 points year over year. And a big jump in rents as well, up 3% just in second quarter, although on an annual basis, rent change was flat. And that wraps us up for the Windy City. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.